Actually,
Sure.
before we do that, I think everyone is talking about Binance and BUSD today, right? So let's hash that out first, because I know everyone's kind of like talking about this, and it'll be a shame not to in this spaces. But yeah, like, what do you think? I think Binance. I kind of feel like the immediate effect of this is not too much. It's more of a nothing burger. I think BUSD has always been one-to-one backed, and Paxos obviously being heavily regulated. I think they do have that reserve to redeem everything. So I don't think this is like a bank run kind of situation. However, it gives more. I guess it kind of like hints at more regulation that might be incoming, especially for some of these bigger entities like Binance. So wanted to get your take on what this means for crypto and where this kind of might lead in the future.
Sure. I think this was sort of inevitable, which is why, like, for now, even for me, majority of my uh, current portfolio, like, which is pretty much stable coins,
Mm,
because I already closed my short positions from 2021.
mm,
Um,
mm,
I actually keep it in uh, most of these, like, stable coin, the so-called decentralized stable coins. I don't really believe like we need centralized stable coins like USDC coming in.
right.
So, I mean, this was inevitable actually. So I was surprised it didn't come sooner, to be honest. However, I
Interesting.
think the
Okay.
FTX thing was a main catalyst.
Yep.
But that being said, like, I'm pretty much like an on-chain maxi, wherever it is possible. Like, not everything has to
Hmm.
be on-chain. So, like, after the FTX thing happened, like, it was pretty impressive if you saw the Uniswap volume. Like, you would expect Binance or them to get 100% of the volume, right? But then
Mm.
I think more than $3 billion of volume came in via Uniswap. So, pretty. I felt. I mean, it was obviously not a great situation, but I felt pretty happy about the fact that quite a few of the people decided to go to the on-chain route instead of just cashing out.
Right.
Um, However, for this, with regards to the BUSD side, it while it has been inevitable, because I think the government just wants to crack down on crypto, and this may also tell us that the CBDC is actually also coming near, right? Which I think back in 2017, 2018, people are actually like in the crypto community were shilling CBDCs like as something governments want to support crypto, which I don't really think is the best way to categorize that. And like, for example, in India, you already have more than 50,000 users and more than 5,000 merchants actually using the digital rupee.
Mm.
And even in other countries, you have these CBDC regulations popping up. So if you already have a on-chain currency, I think the governments would definitely want to crack down on potential, private entities like Paxos and Circle. Like, I'm pretty surprised they haven't come off the tether, despite the so-called the allegations.
Right, right.
Yeah.
I'm kind of looking at the on-chain data right now. It seems like I mean, if we're kind of like jumping over to on-chain data side, I one thing that we've been realizing as a firm is that it doesn't take too much to, become profitable, especially in the DeFi space, because the fee structure are a lot more generous in DeFi, and I think users have less sensitivity to fees when it comes to DeFi. So if you look at some of the protocols like GMX or Gain, you can see that they're pulling in anywhere from like 2 to 3 mil per month to 20 to 12, 13 mil per month, right? And user base is very small, from like 300 to 500, or like 1300 to even 1500, like very small user base that are pulling in that protocol avenue. So I feel like DeFi has a lot of like ability to grow just from that standpoint, like the on-chain data that we see. But yeah, like I mean, I'm seeing some of the Uniswap, I guess like on-chain data here. It looks like they're pulling in. They have about 45,000, daily active users, and then they're pulling in about maybe 51, 52 in protocol revenue, right?
Yep.
Which is huge, which is huge. So yeah, just on, I guess using that as a jumping off point, do you feel like there's room for DeFi to grow? And if so, is that going to be monopolized by Uniswap, or are there other venues like GMX or some of these other guys that are popping up, maybe NFT perps, whatever that is, right? That are, that you're kind of looking forward to in terms of like the exponential growth?
Sure. So I think like maybe because of all the stuff that happened today, I'd like to start out by saying like I think there's going to be two versions of DeFi, and based on my conversations with other regulators as well, right? Just to understand what can we expect and what can we actually share with our portfolio companies on how they should evolve with the regulations. Because
Mm,
regulations, I welcome regulations, but not. I mean, obviously it's not in my hand, but you got to stick to it. But and then like kind of got this idea that there's going to be two versions of DeFi. One, like for example, even a same protocol. Let's take some stable coin, for example, maybe MakerDAO or something. One is going to be the unregulated version of MakerDAO, which anyone in the world can use, and then the second is going to be the regulated one. And then
got it.
people always ask like, how would those things be, mix, sort of, go around with one another? I mean, it's pretty simple. You just play around with the metadata and yeah, I mean, it works out well. So I think people need to keep this mentality in mind because if you really want institutions like our parent company to come in for lending or whatever purpose it may be, we need
Mm.
a regulated entity. Unregulated is just as bad as illegal for a TradFi.
Right, of course. Yeah, yeah.
And
So, good. Sorry.
oh yeah, and with regards to DeFi, I'm still pretty bullish on clubs, right? Um, and then I mean the P2P model, while it has really worked out pretty well so far, Um, I just don't think this is going to be really helpful if you want non-crypto hedge funds to come in, right? And then the definition of institution is also pretty wrong in crypto. Like that, those are not really institutions if you look from our like maybe some of the TradFi perspective, right? You need like a proper on-chain order book to actually get the institutions on board and actually see how fast it is and everything. Like so far, I think most of the order books have faced like quite a bit of issue, right? One is in terms of like greater, like usually when greater liquidity comes in, it just means you have more traders come in, which kind of drives up the gas and storage costs, which well makes the whole thing kind of useless. So like I'm pretty much looking at chains that have the ability to have a Nasdaq like equivalent club being built on them that kind of deals
Mm.
with the whole problem of gas subsidies and storage costs pretty well.
Got it, got it. Okay, so
For
that's what you're kind of looking
perpetuals,
at.
like GMX is obviously a great stuff, but I mean, if you look at why people are actually using GMX, in my opinion, again, I'm not trying to shoot anyone. Um, it's just purely because of the rewards, right? But how long can you keep on feeding the rewards to people? I mean, if you trade it without the rewards, it is just so expensive. I don't know any professional trader in my network that would actually trade on GMX if there were no rewards.
Right.
So I guess we gotta keep the sustainability part in the mind as well. Like it's not the DeFi summer anymore.
Especially yeah, especially if the people are kind of like conscious of their liquidity and their position size and some of the costs in the bear market. I agree.